Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Now let's take a look at the gold market. Here is on euro currency. We do not have any drastic changes. So as I said in the weekly report, it's actually you understand by yourself. So we're coming to the Christmas holidays. Investors already start thinking about spending the good time with the family, and that's why market gradually will become less active in the nearest few sessions probably. So also mentioned in the video as well in euro currency that we will see if gold will show no activity. Maybe we will replace the analysis of the gold with some other assets, maybe some currencies that we very rare take a look at, maybe some Asia Pacific currencies, Japanese yen, Canadian dollar. So we will see. But meantime, there's two moments to update on the gold market. So actually very similar to the things that we discussed in the euro video. Here we see some minor upward action stance right now. On the other markets, such as on 10-year yields, we see bearish context, which suggests some weakness in the United States dollar and drop of the yields on the 10-year bond, at least for 1-2 decimal points to the support that we already have discussed. So it means that here we could get some minor upward continuation, and price still stands very close to the MACD. It tells that the potential grabber still might be formed. So this scenario with some kind of the A, B, C, D downside action is not eliminated totally, although chances are not really very significant. And as we have agreed in the weekly report, we'll start watching for this kind of the engulfing pattern, right? So if you just take together this downside action, and you can see that we have downside candle and upside candle. So it kind of the engulfing pattern, and actually takes the shape of the hand shoulders on the longer time frame. And as we discussed, these hand shoulders might be used as a direct trading pattern for trading, as pattern for a signal. So if hand shoulders will survive and start working, it means that chance on upward continuation significantly increase. If hand shoulders fails, then we return back to the idea of the possible downside A, B, C, D performance to the lower targets. As you can see, hand shoulders seems rather important. And right now, on the daily chart, we still have divergence, we have potential grabber, so we can't totally ignore the ability of the market to show the second downside action. On the 4-hour time frame chart, meantime, we have the upward action here. Market hits the 2019 area, first fib level, and you can see minor pullback is forming. And at first glance, it seems that it might be the right arm. Of course, theoretically it might happen, but in the current circumstances, with some reasons, tells me that maybe it makes sense to wait for a bit deeper retracement. First of all, market has formed bullish reversal swing, and usually after this, it tends to show a bit deeper retracement. Second, here we have the lows of the right arm and actual retesting of this previous top, which seems as a proper area to consider. That's why this first reason why we suggest that still might be the second downside swing to the 2000 even 2005 as we have planned in a weekly report. Another reason, so if we take a look at the hourly chart, you could see that XOP has not been touched totally accurately, so still some gap stands until the target. On the euro currency, this distance significantly higher. So here it almost has been tested, but on the euro currency, this some gap between the target and the recent lows looks more significant. And another moment, overall price action. It is too choppy to become kind of the straightforward upward acceleration, at least for now. So we do not see something of this sort, or gradual thrusting action. It looks a bit choppy and heavy, so it means that yes, maybe on the performance on the 10-year yield we could get some climbing higher, market even could form some kind of the guard distribute to sell or something, but currently the chances on the second downside swing here still seems significant. And you could see even better on the 4 time frame chart what the choppiness of this price performance stands. So it's really relatively, well, gradual and slow type of something of this kind. And you can see what has followed after that. So based on all these factors, the things that we would like to share with you today is that be very careful if you intend to buy gold right at this level. Of course, no doubts, it could become the straightforward upper continuation. Chance for that exists, but taking a look at all the factors that we have, the second leg of the retracement has also not less chance to happen. That's why if you plan to buy gold right here, maybe it makes sense to split position. So take some part of your position here, no more than the 50% probably. If market will drop back to the 1000 even area, you could add more, and maybe there the hand short starts working, you'll get the proper average price level for your trading lot. So that's our view currently on the gold. Let's see what will happen, and be careful with this retracement because it seems that this is not yet the upper continuation.